Hi there, welcome back to Closing Trades. While we're talking about markets, another stock is in focus today, and that's Maruti Suzuki. The stock is trading with gains of about 0.5% right now. The company plans to boost its solar capacity across all facilities with almost 1,000 crore rupee investment. Samir is tracking the story with more details, and he's joining us on the show. Samir.
Indian auto giant Maruti Suzuki has planned to invest 925 crore in the direction of clean and green energy for its solar power expansion plan. And they have set an ambitious target to achieve 319 megawatt of solar power by the financial year 2030-31. And to achieve this target, they are moving in the direction. They are having a short-term targets as well. For the next 5 years, Maruti is looking to have 45 to 50 megawatt of solar power. And so far, Maruti has reached to 79 megawatt of solar power. This year itself, they have installed solar power at its Kharkhoda plant. 20 megawatt of capacity it has been installed, and additional 10 megawatt capacity has been installed at Manasa plant. So a 30 megawatt of solar power, this capacity they have installed in less than a year. That is what they claim so, and they are looking to reach to 319 megawatt of solar power production or the expansion plan in the next 5 years. And for the same, the company is looking to invest around 925 crore. And Maruti understands that when they will be able to achieve this 319 megawatt of solar power at its various manufacturing facility, then they will be able to meet 85% of its total energy requirement. And in a long-term prospect, this will help the auto giant to save significantly when it comes to the power procurement or the power consumption.
Right, Samir, we leave it at that. That's Maruti Suzuki getting that solar power boost. But the Parliament is all set to chair the monsoon session from July 21st to August 12th. This will be the first session after Operation Sindoor, and hence it is expected to be a key point for discussion in the session as well. Prakash is here with more details on what we can expect from the monsoon session of Parliament. Prakash?
Yes, the monsoon session of Parliament is going to be commenced from July 21. A very significant development coming in, and it holds a significant, political, political attention as well, because the session is happening after Operation Sindoor, and opposition parties have been demanding a special session of Parliament to discuss developments around it, and of course involvement of third party in ceasefire as claimed by the US government, which the government has been denying. Therefore, it's going to be very crucial parliament session, perhaps stormy parliament session, as opposition parties will press government to hold wider discussion on Operation Sindoor. As far as other political developments are concerned, the government is likely to bring impeachment motion against Justice Yashwant Verma in cash recovery case in monsoon session. A very significant development coming in along with that. From business standpoint, if you see, the government is likely to introduce insurance amendment bill during monsoon session. Along with that, IBC amendment bill may also be introduced by the government, where it intends to amend section 31(4) of the IBC, and that will pave the way for wider resolution under IBC process, and CCI approval will not be required. So it's a very crucial session going to be commenced from July 21. Back to you.
Okay, Prakash, thanks for taking us through all of those details. All eyes are going to be on this monsoon session meeting for sure. But let's also welcome on board Chakri Lokapriya, the Chief Investment Officer at LGT Wealth. And Chakri, thanks so much for joining us on the show. You know, just before Prakash was speaking to us about this monsoon session, we were talking about Maruti and their investment in their solar capacity. Give us a sense of where you are seeing India's solar space headed, given there is so much buzz around it right now. On one side, you have supply chain constraints coming in. On the other, you have manufacturing PLI schemes that are looking to boost this sector as well. So what is your visibility on this sector, and where do you think we're headed?
Good afternoon. Thanks for having me. I think there are two or three things happening. One is, of course, while solar is clearly renewable energy is a trend which is happening worldwide. After Trump, that has slowed down because the number of subsidies have been removed. And therefore, the growth, while organic, or rather, but through acquisitions, either way. But the government subsidies are likely to come down. In other words, the export revenue is likely will face some amount of margin. Now, that aside, in terms of just moving the panel prices and other related component prices have come down and are coming down very fast, and therefore it's good for many industries to move part of theirs, like Maruti is moving part of the requirement to solar from the traditional thermal. It reduces the overall bill over a longer period of time. Third, finally, is India is adding a phenomenal amount of capacity equal to the entire what the EU power bill in a year. India is adding that over the next 5 years.
Oh, yeah, absolutely. In the meantime, there's, of course, Tata Motors as well. They've gotten into the EV segment with the Tata Harrier EV, which got launched just yesterday. And I mean, it's not an entry-level car for sure, but yeah, that stock was active. And today as well, it's holding out about almost 0.7% as we speak right now. But Chakri, within the entire passenger vehicle space, while of course M&M has been the leader, but that's a combination of not just PVs, but the SUV play and the farm equipment, contribution as well to its overall pie. But if you had to put fresh money to work within the entire auto pack, what would you do?
In the two-wheeler space, I think, four-wheeler space, I think it's M&M has greater legs to the whole upside. They have a couple of EVs coming out. They have their, of course, SUVs, which are doing well, and their ICE engines continue to chug along. And M&M always is a summer part story, but the upside, valuation-wise, is stronger, given that they have a wider range of products.
Okay, so that's your take on the entire auto space. But let's move on to the mutual fund schemes right now. Which schemes are gaining and losing across large caps, small caps and mid caps? Shrishti is joining us with a scorecard of how some of these mutual fund schemes have performed over the year gone by. Shrishti.
Well, yes, we have got the scorecard for the past 1 year within different schemes which have been the winners and the losers. Let's have a look at that. And on your screen, you have the mutual fund scorecard for the large cap schemes over the last 1 year. It's Motilal Oswal large cap fund that has outperformed the rest with a 22% of returns in the past 1 year, and that's followed by DSP large cap fund. But in that, the variation is quite much because DSP has given a 13% return in their large cap scheme vis-a-vis a 22% by Motilal Oswal. But what has not done well is Bharat 22 ETF. Other than that, HSBC Nifty 50 that has declined a 6% on the scheme of funds. Other than that, let's shift focus to the flexi cap, because herein a lot of interest has been building in. But in that, Bandhan Mutual Fund has given a return of 17%, followed by Motilal Oswal. Yet again, one of those top spots by the brokerage firm within the flexi cap scheme, as well as 16% jump is what the index and the scheme has registered. On the losing side, it's Samco Mutual Fund, 11% decline, followed by Shriram Mutual Fund, a 10% decline for the investors. Wealth eroding is what this particular scheme had witnessed. Now let's shift focus to the multi-cap scheme. Herein, the White Oak Mutual Fund that has outperformed the rest with a 15% of a jump, while other than that, it's PGIM Mutual Fund that has actually given a 15% return. I beg your pardon, 15% return is what we have seen. Quant Mutual Fund, a 10% decline. Other than that, Tata Mutual Funds, that's a 1% jump is what they have actually registered in their scheme of funds. Other than that, within the mid-cap space, it's Invesco Mutual Fund, Motilal Oswal Mutual Fund, a 17 to 21% of jump is what these mutual funds have registered. And in the small cap fund, it's Motilal Oswal once again outperforming the rest with a 23% jump overall, followed by Bandhan Mutual Fund as well. So there are a lot of schemes all in all, while in the rest all equity schemes we have DSP World Gold that has given a 61% return, while in the top loser list it's Bandhan Nifty 200 Momentum Fund and HDFC Nifty 200 Momentum Fund, which have actually declined 15% in the past 1 year. So that's the scorecard of the various schemes across the kind of different schemes that we have, which have been the losers and the winners in the year gone by. Back to you.
Okay, Shrishti, thanks for that. Chakri, while we are talking about the entire mutual fund space, help us understand with your view on some of these capital market themes and plays that we're seeing. Some of these stocks belonging to this basket have seen quite the run up recently in the past couple of trading sessions. What are you making of this space and the stocks that belong to this capital market theme basket?
In capital themes basket, I think, the traditional companies like Motilal Oswal, those kind of companies are better positioned versus some of the angel kind of companies, because the ability to convert the clients that they're acquiring into profitable clients is still a big ask. So against that backdrop, with increased capital market activity and awareness and lots of good work that's happening in the space, wealth managers and brokerages I think, are well positioned.
Right, okay, that's what comes to the capital markets theme. But winding down for the day, let me also get in some BTST ideas. Kunal, what's looking good to you?
So, a couple of buy calls. The first one is buy on Oracle Finance, OFSS. That's the script code. Looks attractive. The stock is completing a bullish pennant formation. So, would look out for 9,000 as a near-term target for Oracle Finance, and stop loss could be kept at 8,500. SRF is something which I think is powered back again into a breakout mode after a good amount of consolidation. So, would look out for 3,150 as a target for SRF. Stop us at
Any BTST trades that you'd like to give to our viewers? Kapil?
Yeah. So sorry. So the very first stocks is like auto components has started to find a traction, and within that, Uno Minda is showing a good traction today. The bullish continuation sign. So right now it is trading at a 1053 level. So at this particular point, we are bullish on this particular thing with a stop loss of 1,000 rupees, and on the higher side, we expect a target up to the 1180 level. So that is the one particular trade that we are recommending. Another trade is Metro Brands out of the consumer durables and shoe space. So within the Metro Brands, again, we are seeing some sorts of a positive traction is happening. 1,232 is the level. 1,200 will be going to be a stop loss point for it. And on the higher side, 1,320 will be the upside potential.
These are the stocks that Kapil is also liking at the moment. But Kunal, give us a sense on what you are spotting when it comes to some of these high flyers today that have been subdued over the last couple of trading sessions. And the reverse would apply to Nifty Realty, because that has seen a cut today despite being one of the top gainers over the last week. But it's names like metals, energy, IT, these indices seem to have been finding their footing again. Where do you see these sectors headed on the charts?
Yeah, I think I believe that the markets in the last 2-3 weeks has been showing a brilliant sector rotation. Every now and then you see 2 or 3 days, one particular sector moving up, and then that sector, just what takes a bit of a pause. You see these stocks consolidating, and then in that phase of consolidation, there are other sectors which tend to participate. Case in point, you've seen phenomenal up move for many of the real estate stocks in the last 2-3 days. So that's why I would believe that it's a phase of pause for this sector. But this kind of a breakout which we've seen for many of these sectors, they are very strong in nature because they're backed by strong volumes, extremely strong reading in terms of indicators. And generally, we expect that after a phase of a minor pause, these stocks come back and consolidate and rather break out yet again. Coming to the the couple of sectors which you mentioned, for example, metals. I think it's a bit of a surprise because from that Monday gap down opening for many of the metal counters, SAIL, Hindalco, etc. The way these stocks have recovered indicate that this the trend for the sector is here to sustain as well as grow. I would still believe Tata Steel and SAIL are the two best names on the short-term charts from the entire metal pack. On the IT pack, I would be bullish, and my sense is that it's a matter of time that many of these IT counters, IT large cap names would get back into a breakout mode. So it's a good territory to go for a long on IT stocks from a medium term perspective.
Okay, so that's what you're liking right now. And Chakri, what about you? Where do you think some of these counters are headed? And other than that, without getting stock specific, what's your sense on the entire FMCG space? Because every time we start to see a little bit of a recovery, it's the overall basket that seems to be tempered. Q4 also has not been all that great, but not been all that bad too either for FMCG. What's your take on this sector?
FMCG is at this time of the year with monsoons and all the related news usually performs. But outside of that, there's nothing really significant in terms of, product innovation, volumes picking up. Volumes have been poor, margins have been poor, earnings growth has been very meager. And, against the backdrop, I think that as a sector and even stocks, whether it's Lever or Nestle, we'd rather stay away, even though they're good companies, valuations are rich.
Well, the big trigger is also going to be the central bank, and it seems that the RBI could fire its third rate cut for FY25 come this Friday, as inflation has cooled off and demand has also slowed. With the growth outlook, of course, still blurry, and a system flush with liquidity, a 25 bips cut is what is widely expected. Let me take it across to Varun and find out what his poll is actually penciling in. Varun?
Well, the street is expecting a 25 basis rate cut in this policy and actually a more 25 basis rate cut in the August policy. Now, the Reuters poll says that around 87% of the poll participants are expecting a 25 basis rate cut in this policy, and around 81% of the poll participants, they are expecting a rate cut in August policy. Now, what is fueling the rate cut? It is basically the GDP growth, inflation, the demand environment, and also the benign balance of payment dynamics. Now let me take you first to the GDP numbers. If you look at the GDP numbers, though in this, the fourth quarter GDP numbers were better than expected, but yes, for FY25, if you look, the GDP numbers are actually at 6.5, and this is actually at 4 years low. Now if you look at the inflation, because of better monsoon, it is expected that the inflation would be in the tolerance level of around 4%, which RBI wants, and actually in the month of April, the inflation number was around 3.2%, and it was at the lowest level after July 2019. So this is another factor. If you look at the overall demand environment, no doubt in the second half of FY25, we have seen some demand revival, but still if you look, many of the indicators, they are indicating towards a slowdown. So this is also one of the reasons because of which many analysts on the street are expecting a 25 basis rate cut going ahead. But if you look on the liquidity front, no doubt there was issue regarding liquidity in the earlier months of this calendar year, but in the month of April and June, we have seen the overall liquidity situation actually improving, and that's the reason people are actually estimating that RBI will not actually put additional measures on liquidity. And also, if you look at the overall stance of RBI, that is going to be still accommodative. So it's going to be a good policy wherein we will see a 25 basis rate cut in this policy, but yet this is not going to be the last. Actually, the street is also expecting another rate cut in the August policy. So you are actually going to witness 50 basis point rate cut from here on.
Varun, thanks for taking us through those expectations. So largely a 25 bips rate cut is what the street is penciling in for the policy meeting outcome on Friday. But inflation trends remain benign. This is the word coming in from Upasana Chatra on the sidelines of the Morgan Stanley India Investment Forum. She also shares her expectations for the RBI rate cuts this year. So let's go across and listen in to what she has to say.
Looking at the domestic growth and inflation trailing data and also the outlook on the monetary policy side, we do have the view that it will remain decisively on the easing side. We've already seen RBI take those steps, change of stance to accommodative cut. Two rate cuts have already come through. RBI has added a lot of durable liquidity in the system, and I think that will continue. So with the inflation outlook remaining benign, as I mentioned, you'll see readings closer to say 3.5% in the next few months. And even if you look at 1 year forward inflation forecast, they'll be pretty close to 4%. So RBI will be comfortable that inflation is durably aligning with its medium term target of 4%.
Okay, that's the take coming in on where the economy is headed and how the RBI is going to balance it all out. But it seems like there's going to be a 50 bips cut that we can expect in the second half of this calendar, starting off from this Friday, wherein one is anticipating another 25 bips cut itself. But Chakri, just before we let you go, what is your own anticipation? 25 bips you think is well priced by the market, or would the market want more?
I think 25 bips is a good start, and that's kind of priced in, and we get another for 25 a couple of months down the road. And this places banks well because their NIMs will now start improving. They're cutting down the loan, cutting down the NIM mismatch will kind of even out. Again, I think banks and NBFCs are very well placed.
Okay, Chakri, thanks so much for joining us. On that note, we'll let you go, but time to get you some updates on the block deals that we've seen in the first half of the trading session. Foreign investors and promoters are cashing out in bulk today. Big block deals have been seen for worth more than 2,000 crores overall in the market today in the names like Tata Tech, ABFRL and Alkem Labs. And this is following a spate of MNCs and promoters exiting stake in the country. Anurag Joshi is joining us with the updated details on the block deals that we've seen in the first half today. Anurag.
3 block deals have happened today. These are Tata Technologies, Aditya Birla Fashion and Retail, and Alkem Labs. In Tata Technologies, total of 8.59 million shares changed hands. And the key deal was the TPG Rise Climate, which is a private fund advised by private equity firm TPG. They offered 8.52 million shares of Tata Tech in block trades. Now these deals we have given to understand have happened in the range of 744.5 to 767.5 rupees a share. Now coming to Aditya Birla Fashion and Retail, a total of about 108 million shares have changed hands in a total of 21 block deals. The Flipkart deal was the major deal in this counter, and in Flipkart Investments, in fact, sold its entire 6% equity stake in the firm, and the offer from Flipkart Investments was for about 73 million shares, and this was via a bulk sale. Alkem Labs, now that saw 1.72 million shares change hands in the block trade, and a shareholder had offered 1.42% stake in the secondary sale, and this has happened at a floor price of 4850 rupees a share.
Thanks for taking us through that. So lots of stocks in focus: Tata Tech, Alkem Labs, as well as ABFRL. And ABFRL, Aditya Birla Fashion Retail Limited, is the one that has been taking quite the knock in today's trading session. Of course, more details on the buyers and sellers will be out for sure after the market closes in the evening. We can expect to see these details, and we'll be confirming some of the things that we've already told you and what Anurag joined to tell us on the show as well. A couple of minutes left for today's trading session. Let's just quickly bring on board Kunal. And Kunal, what are you making of tomorrow's trading session? It looks like we'll manage to close in the green today, but nonetheless, it's been very range bound for us. Do you expect these moves to be there in the market tomorrow? Can we see a similar trading day tomorrow as well?
I think tomorrow could be a similar day to the start, and depending on I think the intent towards the news flow surrounding the RBI policy, I would probably believe that post that is where we can expect the markets to head towards. Also, I think tomorrow being Thursday, we also have the weekly expiry for the Nifty, and it's been a tough expiry because over the last 2-3 days there has been a sharp drop in the India VIX. That I believe could be a interesting change of stance for the markets, because more the India VIX drops, that's actually a very strong and a comfortable sign that the markets are getting ready for a breakout yet again. So I think we are in for a bit of a interesting the next couple of days for the markets. So it's better to hold on to the long positions in terms of indices as well as individual stocks. Level wise, 24,500 still remains to be a key and a critical short term support. So we're trading about those levels for the last couple of days, even with some bit of choppiness. That's another positive for the markets over the near term.
Thanks for that view. So we can expect similar moves tomorrow. And of course, all eyes are going to be on the India VIX as well as the overall market, given that we're heading into the first expiry of this new season.